So today is July 7th, and I thought it'd be a good time to do a market update. If you hear this, oh wait, now it's not doing it. I have a very squeaky chair, so I apologize in advance. It's driving me crazy. Okay, so let's talk about what's going on with housing, okay? Let's start with rates. Everyone always wants to talk about rates. I live in rates every day. So if you don't watch this channel, you don't realize I'm a mortgage lender in 48 states. I am a full-time mortgage lender. I do hundreds of transactions every single year. This is what I live, eat, and breathe. Now, as a mortgage lender, it used to be that like if rates went up a lot, we'd all be like, oh gosh, you know, this is shocking. Rates have gone up, you know, a tenth in the last month. Oh, it's a different world this year, guys. I'll see rates go up 0.5% in a day. I'll see them go down 1/4 in a day. It is a market that as a lender, you have to pay such laser focused attention to what's going on with rates if you want to do what's best for your clients. It's that simple. Like, I have never been a huge drinker, but you know, I'm in the wine country. I love me a glass of wine. I am barely drinking this year because I feel like I have to be on my A game, like times 10 in this market in order to make sure I'm doing right by my clients. So let me give you an example. So last week on Friday, rates dipped, okay? And you know, whenever rates dip, there's always the question mark as a lender that we have as to, are they going to go further down? Okay. Now, I'm very lucky in that I'm at a company where I have the ability to renegotiate if I have a client in contract, and there's certain rules around it, but I can lower that rate. Okay. So when rates dipped, my initial reaction after watching the market, okay, so far this year is I need to renegotiate as many clients that I can benefit from this. And that's what my team and I did. We sat there for 2 hours going through our pipeline going, okay, what about this one? Pricing out every single person. Can we get them lower? Can we get them lower? Oh, darn. Okay, this one's already low enough. We can't get them lower. Wow, this one we're going to save 0.5%. Bum, 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 bum. There is no break. Right? Because it's like, if I had been like, oh, we'll just wait till Tuesday, I'm sure it will be fine. No, rates went up on Tuesday. Rates went up on Wednesday. Rates are going up today because the Fed came out yesterday and said, oh, we know you're afraid of a recession, but we're going to keep on raising rates to try to stop inflation. And that's what we're seeing, is we're seeing this huge, I don't want to say, it's not like a competition. It's more like a headache. It's like too annoying. It's like, ugh, it's like being trapped in a room with two annoying children. One is recession and one is inflation. Neither one of them bring us any joy, right? Right? You know those kids, the ones that are like screaming and like wiping paint on each other and they're just dirty and, ugh. Okay. Clearly, I love small children. Anyways, but that's what it's like right now. So we've got inflation that's just out of control. It's out of control. And for the last year, there's been a lot of people saying, hey, inflation's going to be a problem, whereas the Fed was saying it was transitory. Okay. And so now they're raising rates, trying to stop inflation. But it's not just the rates that impact inflation. Gas prices have an impact on everything, right? So think about it. Gas prices have actually gone up 53% in the last year. I looked that up. That's a real statistic. 53% in the last year. Well, guess what? That increases the cost of everything you buy. Because think about it. If you're buying corn, they have to put gas in that tractor. If you're buying, I mean, so it definitely affects everything. Anything mechanical, you know, to a large extent requires gas. Increased costs makes that more expensive. The fuel to fly stuff, right? Think about, like, you don't really think about this until you start paying attention in the grocery store. Like, I buy a lot of fruit because I aspire to eat it. And if you look at the tags, made in Chile, you know, from all these different countries and places, well, guess what? If gas is more expensive, that's going to impact how much that costs for us as well. Okay? Because beyond ships and planes and boats, we also have our trucks moving it in. Well, if those trucks are paying higher in gas, well, guess what? That impacts you. So the gas prices is having a huge impact throughout everything, okay? And then add on top of that supply chain issues, right? So I looked up this crazy statistic the other day because I was curious. I was like, how much do we actually import from China? Because I've been really paying attention to the lockdowns, right? You know, when Shanghai was locked down, God, I think it was for over 45 days, they had people screaming in the buildings. Like, it was nuts, like chains, everything, right? Well, when people are locked down like that, it's decreasing, you know, manufactured goods, and that's what we're buying, right? So in 2021, we purchased is America purchased $541 billion worth of imports from China. Okay, so when you suddenly have huge portions of that country being locked down consistently, the pain that we were feeling in the supply chain that everyone thought was transitory, right? Oh, it's just temporary. It's because of COVID. It's just temporary because of COVID. Supply will get back to normal. You know, then stuff won't be as expensive because we won't be having to. Well, guess what? It's not ending. Okay, the shutdowns are still happening. It's still impacting the supply chain. There's other supply chain issues beyond that, but you know, I go to what's easiest to understand. And I think it's easiest to understand that if people are locked in their house, they're not making goods, right? The ports aren't open. Therefore, what would normally be coming to America at very inexpensive prices is not. And it goes into scarcity as well. So we saw that last year and the year before with housing. Really low inventory makes it more expensive. Same thing with supplies. Okay, so we have all these different factors going on, you know, and it's brutal. I feel I'm watching it all, and every day I'm like, how much more, you know, because with the Fed doing this next increase, are mortgage rates going to continue to go up? Yeah. Are we going to see some dips because of recession fears? Absolutely. I 100% think we're already in a recession. I think we've been in a recession for at least 3 to 4 months. Okay. And there's a lot of other people that think we're in a recession already. And what we've noticed recently is the Fed's like 6 months behind, 6 months to a year behind on everything. So they're going to keep on pushing these rates up. And the thing is, it doesn't directly correlate with mortgages. So if they say they're going to raise rates 0.75, it doesn't mean the mortgage rate goes up 0.75. However, the market reacts to that, and that's where you see interest rates for mortgages going up as well. Okay, but what it really impacts as well is student loans, credit cards, you know, car loans, all of that. The interest rates on that are going up as well at a time where the cost of goods is going up, the cost of food is going up, the cost of getting to work is going up. It is the perfect recipe. Okay, now look, if I wanted to get a lot of clicks and views and likes, I would say it's the perfect recipe for a housing disaster. Okay, I don't believe that though. Okay, I think it's the perfect recipe to put Americans back, you know, economically to a huge amount. Yeah, I do think it's a perfect recipe to put people in a terrible situation. However, in regards to housing, what I'm seeing, okay, now I'm licensed in 48 states, so I do see some differences amongst different states in different counties. Okay, so for instance, there's a portion of North Carolina. Man, it's still 2021 there. It is crazy. Like, it is still crazy competitive. Whereas, you know, there's other states where I'm starting to see more of a slowdown. Okay. I'm not seeing foreclosures. I'm not seeing prices drop. I'm seeing a slowdown. So I would argue that this market is returning to normal. And the reason it's returning to normal instead of a disaster is because we still do not have enough inventory. Okay, so sometimes you guys will see the headlines will say inventory is up 20% this month. Okay, versus what? Versus last month? Versus last year? Or versus 2018? Tell me where inventory, or 2019, tell me where inventory is in relation to 2019, because that's what I care about. And most of the reports I have seen have shown that we are still far below the inventory that we had in 2019. 2019, I would argue, is the last normal market we had. 2020 and 21 were not normal markets. We knew that. Okay, we knew it was crazy with money being that cheap and inventory being that light, people being able to work from where they want with a lot of jobs that opened up. There was a lot of opportunity. I mean, investors, my God, as an investor, if you can buy an investment property at a 3.25% interest rate, sign me up, right? Second homes, oh my God, that dream beach house, 3.25%, 3.5%, 2.5%. Oh my God, it made everything possible for a lot of people. Well, those days are gone, right? So we're returning to normal. Interest rates, you know, 5, 6, high 4s, whatever the day is, it's going to vary, right? Depending on loan program, credit score, all that fun stuff. That's more normal than what 2 or 3 was, okay? So what I'm seeing with my buyers is I'm seeing the buyers who came into the market and really only started thinking about housing in 2020 and 2021. They're terrified. They're like, I'm gonna wait. Whereas my buyers who've been around for a longer time, you know, let's say that this is a second home or a third home, or maybe they had a house in 2010 or, you know, 1984, whatever, they're going, okay, I get it. These rates are more normal. I'm fine. Like, let's find a house. What do I qualify for? Okay. Now, it's interesting for me to watch investors in this because I've had some investors who are really starting to get excited. And the reason they're starting to get excited is because they know that where there is fear, there is opportunity. I have said it my entire career. Where there is fear, there is opportunity. So they know that if the average home buyer is scared to buy, because look, you guys are being fed right now by the media, oh, you shouldn't buy. Now's not a good time to buy. You should wait. Well, last year they told you you couldn't buy because you didn't have cash or because you couldn't pay over appraised value. Now they're telling you you shouldn't. And the question is, well, when do you get to? Right? Now, my investors are getting excited because they know that if there's a good portion of people who are scared, it will make it so they can negotiate on houses. Okay. Now, do I think we're going to end up with a bunch of foreclosures? No, because we still have people who have tons of equity because of how much housing prices have gone up in 2 years. We are not seeing a ton of houses sitting at the market in any market right now because there's not enough houses for sale. Okay. So if we were going to go towards a housing crash, we would need a lot more inventory to hit it. And with the way that building's been restricted for the last 10 years, there's a lot of reports saying that's not happening anytime soon. Okay, so what would I say? Okay. Don't buy a house just to buy a house, no matter what, right? If you are renting, okay, I do think you should be planning or looking to buy a house. If you're not ready now, I think we should be putting a plan together. I think that as a renter, if the rental increases across the country didn't make you open your eyes, you need to open your eyes. This is going to continue. I'm going to be doing a video on corporations buying houses. The numbers are way bigger and scarier than you guys have any clue. And people are like, well, if the corporations start charging too much for rent, people won't be able to pay it. Then they'll go under. No, guys, they'll kick you out of the house and they'll find someone that does. Like, I'm very concerned that we're going to have a homeless epidemic because of this. Okay, so I strongly believe if you do not have a house, you should get prepared, you should get pre-approved, you should start looking for a home. Do you need to rush? No, find a house that you like. Find a house that you can enjoy for the next 5, 10, 15, 20, 30 years. Have something as a hedge, right? In case rents go up a ton. Right? So what some people will do is they'll buy a house, they'll live there for a couple of years, maybe it's not the perfect house, and they're like, you know, I really just want to rent by the beach. So they'll rent by the beach, they'll turn that first house into an investment property, right? Well, guess what? If the beach rents get too much, they always can go back to this house. And if you guys are doing a 30-year fixed mortgage, this house is always going to be there at that payment. The only thing that's going to change is taxes and insurance, but that's really nominal compared to the rental. So I'll be doing a video about that as well. I don't want to get too deep into it now. The biggest things for you guys to know is rates are all over the map. You need to be working with a lender that is paying attention and laser focused, because if you're working with a lender that's relying on like, you know, Wall Street Journal or Washington Post or any of those for rates, you're dust, right? Those articles come out after the fact. Friday, that beautiful day of rates, we had like maybe 2 to 4 hours. The news is not going to be able to pick up the opportunity and deliver it to everyone in America quick enough. Okay, that's why you need to make sure your lender is paying attention and looking for moments. Now, the other thing is you need to be working with someone that can educate you on the volatility of the market and who has the ability to lock your rate while you shop. I do not know why people are choosing to work with lenders who can't lock their rate while they shop. It's an option that I think everybody should have right now. Okay, and as I say that, of course, I go, well, we can't do it with jumbo. We can do it with VA, we can do it with FHA, we can do it with conventional loans. So if it's a $2 million loan, I'm really sorry, I can't lock you for 90 days in advance before you're in contract. Everyone else, game on. It's an option. It's an important option to have as we go through these times. Okay, now, what do I think is going to happen? Crystal ball time. And like there's 4 of you that will get to this part of the video, and this is actually the best part. Okay, so I think rates are going to continue to go up until the Fed throws us face first into a brutal recession. I think it will take them 4 to 5 months to realize that we're in that recession, which I think is already occurring. I think at that point they'll stop raising rates and they'll go, oh, let's wait, see how it goes. They'll see if we survive. If we start to recover, then the rates are going to stay where they are. If they not, they'll lower them a little bit. Do I think they'll drop them back to 2 or 3? No. I mean, we'd have to have something truly catastrophic happen in order for that world to happen again, okay? So do I think that we could end up with lower rates? Yeah, potentially, but it depends on how high they get before they stop, right? And right now, the signs that they're giving us is the only tool they think they have to fight inflation is rates. So here we go. So do you wait? I don't know. I wouldn't. Like, here's the thing. If I didn't own a house and if I found a house that I really liked and I qualified for and I could happily make the payment, even if the rate was, 5, 6, 6.5%, whatever it is, right? I would buy the house, and then if rates go down, I would refinance, right? You can always do that. If rates go down, you can refinance. That would be my strategy. But I'd want to make sure that I could comfortably afford the payment at what the going rate was. Now, if I can't comfortably afford the payment, should I buy the house? No, guys, you should never buy a house you can't afford. Like, I know there's a lot of people that are like, oh, you have to stretch and look, food's overrated. But no, you need to be pretty careful right now that you can actually afford the house, because with the cost of everything else going up, you need some cushion, right? You need some cushion. I bought strawberries the other day, a little container of strawberries. It was literally this big, okay? Cut up strawberries. And I just brought it to the register, because I was just like, I bought strawberries for years. They're like $5, right? Like maybe it's $5. $11. It's $11. Oh my God. And that's the world we're living in right now. So it's really important that if you guys are looking at a house, you just make sure that you're budgeting it in for the fact that prices are going to keep on going up until they get the gas under control, until the supply chain's under control, until inflation eases. We're going to keep on seeing prices go up on stuff. So I hope this video was helpful. I'll be digging into some of these other topics more in the future. I just wanted to get something out to you guys because I get a lot of questions about what's going on with the market. Oh, one video to watch. So Dave Ramsey, I don't know if you guys know him. I know a lot of you guys know him. Dave Ramsey, you can find him on YouTube. He did a video recently. His opinion is that now is actually the perfect time to buy. So it's worth watching. There's a lot of people on YouTube who do the videos of the housing market's gonna crash, doom and gloom. The reason they do it is because that's what gets the most views, the most clicks, and the most engagement, which gets them the most advertising dollars. So make sure you're watching people who are experts, B, aren't just clickbaiting you, and then make your own decision. Buy a house if you want a house. If you don't want one, don't force yourself. Although if you're a renter, definitely look at what's been going on with rents. So I hope this has been helpful. As always, I am licensed in 48 states to do mortgages. If you have questions, if you're like, I don't know, just get on my calendar. Alyssa or I will chat with you. We'll talk it through together. It's super relaxed, easy breezy. But yeah, I'm here for you guys. Thanks for watching.